My name's Sharon Levrez and I'm Price Assessment Manager at Fastmarkets. Today I'll be talking about the China pulp market and recent developments in futures trading. China has long been an important player in the international pulp market. It's the largest growing consumer of market pulp, accounting for about a third of global demand, and its consumption is still growing. Essentially, there are two pulp markets in China. The offshore cargo market, where producers sell pulp to large mills or traders for import, and the domestic retail market, where the same traders sell that pulp on to end users for a profit. When the Shanghai Futures Exchange launched its pulp futures contracts in November 2018, derivatives trade in China pulp was limited to over-the-counter swaps. Right from the get-go, trading volumes on the SHFE were impressive. In the first year alone, some 400 million tonnes of pulp changed hands. That's nearly 6 times the physical market. SHFE pulp futures offer physically delivered softwood, meeting one of the brands specified by the exchange. Since their debut, there has been an increasing correlation between the Shanghai futures price and transaction prices on the local resale and offshore cargo markets. And this is not something with which most traditional pulp market players are comfortable. To help manage their exposure in the new market circumstances, physical pulp players could benefit from a separate cash-settled contract based on prices in the offshore cargo market. Unlike physically delivered futures, cash-settled contracts are based on the price actually paid for the goods. Norway's Norexco, the pulp and paper exchange, is working on just such a contract. They plan to launch hardwood and softwood pulp futures in Q1 2021. These would be based on Fastmarkets RISI's NBSK SIF China assessment and Fastmarkets FOEX's PIX China BHKP index. Both of these prices are already used in contracts. They are rooted in a robust pricing methodology based on transactions concluded in the offshore cargo market. Fastmarkets has a strong history in providing benchmark prices for the industries we serve. We apply strict policies and processes developed in accordance with the IOSCO principles for price reporting agencies, the gold standard for all price reporters. Its pricing process starts with our trained reporters completing a broad representative survey of participants from across the supply chain. The data we gather is entered into our proprietary pricing database, where it is analysed, normalised where required, and outliers are removed. Our integrated peer review system ensures that all data is verified by at least 2 reporters and an editor or senior reporter to ensure quality control and compliance. The new Norexco futures should provide physical market players with a more appropriate tool to manage their exposure to price volatility. Moreover, they will allow companies to cash in on the arbitrage between China's offshore and domestic markets, as well as the differential between hardwood and softwood pulp prices.
To receive an alert when the new pulp futures contracts are available, and to learn more about Fastmarkets pulp prices, go to the URL on your screen.